Well, let's see if we can get a set and forget set up, shall we?
Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I'm the big fella Scruff, and what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit the subscribe button if you find value in this, because it genuinely motivates me to do more. And share it to your friends. Why not? Let's see if we can get this little channel to grow. It's only a tiny wee channel, but I'd like to think there's lots of value in it, you know. So little risk, big reward if you want to go down them routes. But I don't believe in risk reward. And if you follow the videos, you'll find out exactly why. Because personally, I think it's a fable. But that's not to say that you shouldn't be at the markets willy-nilly. You should be at the markets professionally. You should never risk anything. Remember that. If you're risking something, that implies you're gambling something. You should invest. You invest X amount of money to get X amount of money. Sometimes those investments don't work. Loss. But if you've planned your day out, plan your trade out, then you'll find that you have a very good hit rate because you're good at the job. You find that you have a decent bankroll because you're good at the job, and if you do your job, you get paid. Now, this is, to me, is just common sense. It's running a business. You know, I'd never, ever go to market thinking I'm going to lose. Never. Because that gives you the wrong impression, gives you the wrong thought process. You go into the market, analyze it. This is the trade. This is what I expect the market to do over X period of time. And this is how much I'm willing to be paid. You do that, you start getting a big hit rate. Mine, as you've seen, documented, I haven't been below 80% in a very long time. And it's not been this year. I haven't been below 80% hit rate this year. I'm actually in 90s. But sounds clever, sounds good. But it's not as good as you think it is, because I'm very selective with what I trade. I don't jump markets. I look at the same markets over and over. I don't overtrade. I look for 1 or 2 trades a day, and that's it. Now, the guys do go at me. Yesterday, I was having a bit of a rant, shall we say, and kind of proving a point. So I'm trading multiple markets at once. All the same process, all the same style, all of them won. I then went back to market again, just to show the guys in real time what was happening. And again, smashed it. And now we're going to look at that same account. So we have nothing running. Tickets, there is none. That's what I did yesterday. Multiple accounts across the day, not one loss. Because all of it was planned. All of it was worked out. And it's all done through multi-time frame. You think you look at a 5-minute chart, you know what's going on. You have got zero idea what's going on. You look at a minute chart and you think what's going on. Good luck with that one. Right. What are we looking at here? Well, first of all, if I just sort of pull this down a second, I'll be able to show you. A little salute to Chris, the long-haired Aussie. Get a haircut, and never mind shaking your bonnet at me. He's getting on my age and he's got hair out here. Bloody hell. Grow up, get a proper haircut like mine. But he wanted me to read the FTSE for him. Great. I haven't traded the FTSE in ages. You know, so I'm a little bit out of sync with it. But does it matter? No. Because a chart's a chart. And a chart will follow certain rules. If you understand what a deep trend is, then you can understand what your target is. Because when you're looking at monthly and weekly charts, yeah, give you a good idea of a broad stroke. Is it going to affect the next 10 minutes? Not really. But that broad stroke is important to your target. The guys know this because I explain it to them. Look at the mid-trend, what it's potentially going to be doing in the first part of the session. You know, and the session is broken up into two sections. You've got the morning session, you've got the afternoon session, and then you've got the overall session. So London will have a morning, an afternoon, and then London itself is the overall session. Then moves over into New York. New York is the overall session, but it'll have a morning session, an afternoon session. And in each one of them, there is a rotation of the market. And then it repeats again as you go into later night, the Asian session, and then the cycle starts again. So your mid-trend is quite important. That tells you the direction of the trade. Then you look for a now trend. And what you're doing is you're filtering through the markets to get to a point where, okay, I know what my target is. I know what my direction is. Now, which is the now trend, I find the timing. But what if you haven't got time? That's what today's about. Well, today is about where you can take that self-same analysis and just work out where roughly there's going to be a bounce point to go to the chosen direction and place pending orders, set and forget. Something that we do. Now this, what we're looking at, you can see I've broke it down, told them exactly what I expect. Taking the piss, there's a shocker. The guys are actually in the bar having a face-to-face chat. I join them in Zoom calls every day. Tonight is going to be one. It's the nighttime one, because we do one at night, one in the morning. So everybody, regardless of your time zone, has an opportunity to speak with me or get involved, because obviously when we're doing 8 o'clock in the morning, some people are in bed. You know, and likewise, on a night time, the UK lot are in bed, but the Aussie and the American guys, they can all come in and have a chat. So everybody gets an opportunity, and then the bar runs 24 hours a day where you just drop in and talk amongst yourselves. Okay. Now those Zoom calls are then put down here. There they are. And there is all sorts in these, because we go through everything. You know, whether it's a setup, whether it's your psychology, whether we're breaking down a chart that's gone wrong or a chart that's gone right, it's all done in here. You know, open format. Brilliant stuff. We've also got Where the Scruff. That's actually how I trade personally. And it's, at the moment, it's 43 modules telling you exactly how I build charts up, what I look for, what I see, pieces them all together. And then it's got real-time live fittings. Now we're going to add an extra couple of modules to this because I want to get a little bit deeper into how to read a chart, but also how to do hybrid chart reading. And what that means is, well, yeah, you're looking at swing trades, but what about if you want to trade now in the moment? Can you use a swing trade methodology into a day trade? Well, you can, and you hybrid the two together and it becomes much stronger. Something that I do on a regular basis. So what are we looking at here? Well, my overall basis of this, if I look at this, and I'll just pull this across for you. Or at least I will do in a second when I get the bloody thing switched on. There we are. Is to sell it. So to sell, my notes are telling me that it's overstretched, be careful. So it naturally means wait, meaning it's a C trade. Now I don't, now if I look at this, just to show you something, I have my little rules here. I only trade A and B setups, and I have to align with the double D, dominant direction. Okay. Now, when it's a C trade, it's what's deemed risky. It's not overly bad, but that was at 8 o'clock down here, and it was telling me to wait, and sure enough, waiting was the right thing to do because it's now come up and it's found this area. Now, this could push a little bit higher up. Drop it into an hour and you can find out what's going on. Well, there's a colossal move. It's come down, it's gone back to the double top, and now it's showing signs that it can come back down. Okay, so if I'm going to set and forget, where can this feasibly stall and start? Well, if I take a fib from this section to that section here, right? So this is probably the ultimate goal, this red line down into here, okay, with short terms here. All right, these are what's called entry exits. In other words, you can use them to enter, you can use them to enter, to exit rather. So we'll drop them in. Now that 38 is highlighting a key area because it's already on the chart, as is the 50. Now it hasn't been to the 50 yet, so there's good probability. So what we're going to do is we're going to start putting orders in here, and then we're going to have them targeting. Right, okay. So what I'm going to do is I'm going to put the orders on this black line and stage it all the way up. So that's what I'm going to do. And then I'm going to stage it down to this red line. Why is that? Well, it's a solid barrier. I don't like to outstay my welcome, but I'll get half decent money. So that's the plan. That's what we're going to do. So we'll start putting orders in now. It's got a little ways to move up higher. Now what will happen is it'll either come up and trigger me in. So get that in. So there's the first order into that blue line. Now what we're going to be doing is I'm going to be staging backwards a little bit as well. I'm going to have two opening orders at the same place. Coming down. There we go. Okay, so I've got a full clip here. I just move this to 5 minutes. Now that we can see. And it's a reasonable place to put an order because it's at a key stall point. And you can see that stall point here. Pushed down, created the accelerant, came down to here, and has now come back. It's not often for a market, or uncommon for a market to oscillate. Now, here, maybe a little bit early. I might actually move this one up slightly. But let me just put in some staging orders. Just need to measure this out slightly. Okay, bear with me just a second. If I push it to a 15-minute, you'll kind of see what I'm looking at. So there's a swing. So we've got barrier 1, swing 2. So we're going to stage up to probably this section here. And if it breaks the top, well, then we'll have to have a bit of a think about it. So let's have a little look, shall we? So from there to there across. One of these, we're going to move this one up ever so. Yeah, put that one there. And I'm going to put another one above it. And I'm going to drop 3 orders in to start with, staging up. So I can see what we're looking at. Okay. And this one up to there. Now it's all going to be managed in. Now what this will do for me is it will self-manage the trade based on order points, because I'm in a webinar this morning, so I have 0 opportunity to watch the charts. Good. Right. So I think what we'll do, we're going to target the whole lot into this blue line for now. There. Just like so. So that's our first stage target. Now, this one will generate 164. That one 141. This one 118. This one 96. And that one 72. Just by coming down onto this. Okay. Very, very easy trade. Okay. But collectively, it'll make half decent money. So that's it. That's the premise of the trade. It's what we're looking to do. It's staged between this point and this point based on this move, which is based on a bigger move, which is this one. Simple stuff, guys. Simple stuff. So I've got to get ready. You know what the trade is. I'll leave the camera running just for now. But it will be going off in 20 minutes or so. And then I'll come back to you later on this afternoon when I finish the webinar. Okay, catch you soon, guys. Okay, guys, I've got to go into the live stream in 15 minutes, so need to prepare, make myself look beautiful for the camera. Either that or switch the camera off, make it even better. This is just a set and forget to run throughout the day, so not really worried about it because I've got loads on today, so I won't really be day trading. But day trading is, how do I put this? It's as much in the planning as it is in the execution. The execution is just the last part, guys. And that's genuinely where traders fail. They think it's in the execution. It's not. It's all in the plan. If this runs against me, do I care? No. Because I know where I'm getting out. I've staged in where I'm getting in, and the trades will actually self-manage themselves. What does that mean? Well, how many times do you go into market, you get stopped out, and you go back in again? Well, you do it all the time. So you're getting death by 1,000 cuts all the time. This, well, it's just kind of putting all of that into one idea, and then you live or die by your decision. Now, at the moment, I've got one that's positive, two that are negative. I'm sitting 42 quid underwater. Am I worried about it? Not in the slightest. You know, I can take quite a bit of heat. So in the grand scheme of things, this is minimal. But when I come back, because it'll come into fruition what I'm after, you know, yeah, it's pushing up. And up into here is probably where I want it to be, but I didn't want to be left behind. So if I've got to sit in a little bit of heat to get up to here and then roll over and come back down, so what? But what's it done? Well, it's built a position on the way out, and then it'll build me a profit on the way back. But if it keeps on trucking, well, then I have a problem and I have to deal with it. But that's planned as well. And the plan is, at the moment, as long as it stays under that line, I'm happy. If it goes above that line, I've got to then start to think about what I'm going to do. And that can be, I'm going to reduce the position sizes that are in other words, lessen the load. I can kill the trade off altogether and just, well, accept that I was wrong. Or I can think, right, I'm sitting in heat, but the premise is still there. I'm going to ride it out. Many things I can do. And because I've got a broken trade, I can switch positions off quite easily. Because if I'm looking at a position that's 7 quid against me, well, it doesn't take a lot of thought process to kill that position off. Lessens the load. All right, take a little bit of a slap. But if I was sitting on a single position and I'm trying to work out, well, what's 5% of that, what's 10% of that, it starts becoming mathematical gymnastics. And I don't want that. This makes life easy for me. If I'm taking part profits and I want to take 13 quid off or 15 quid, I can just switch off that in profit trade and I've banked 15 quid. It's a simple, easy way to manage a trade. Anyway, I'll catch you when I get back.
Well, we're waiting.
Okay guys, I'm back. Bit of a roller coaster this one. It's up to 2:33. It's now coming on to 3:30, end of the night. Let's kill this off. Boom.
Good job.
Killed it off because we could see signs of a reversal here. Could have easily pushed down, but as normal, you sit down, you tinker with things, and well, there's a couple of signs on the horizon. I'm kind of sure that this may well turn. Oscillators a stretch, that sort of thing. And it's hit a key level. Okay. So there's nothing running. No orders. And then there you go. There's all them FTSE trades. All right, we sacrificed the last one, but the rest of them have made up. And earlier on, the guys were asking me, or one of the guys was asking about Euro Aussie. So I slipped a quick trade in for that as well. And then there's the end result. If I should be able to find that in here somewhere. Guys are in the chatty room. I've got to remember where it's at now. One of the guys has just passed another funded challenge, which apparently is my fault. Well done there, BT. Excellent. I'm really proud of you. Forex chart. Dan B's just passed the challenge as well. Oh, fucking fantastic. This is looking good. Right, I did the Euro read for them. And it was in here somewhere. Can't really remember. That's the problem when we've got a few of these things kicking about. You kind of forget, hold on, there we go. Duke was explaining to Henry where you find the Aussie Euro in the sheet. And it was there, and obviously it was in the market pick, but it wasn't on my buyer's sheet because it's not a product that I trade a lot. But as usual, if I see it and they request it, I'll open my mouth, which I did. And if I open my mouth, my point of difference is I will trade it. And I did trade it for them. And there it is right there, 50 quid. So all in all, I'm quite happy with today. You know, I think it's been quite a good day. How many pips did that create? Well, let's just quickly flick this on. It'll only take us a second to do it, guys. So it's 40, 85, 50, 64, 50, 17, minus 450. Didn't get out of that quick enough, did I? And a 50 quid. And the size was a 5 across the board. So just drop that into the pip calculator, and that'll give me the pips for the day, which is 50 pips, making 252 quid. And I did nothing. Not really. All I did was sit, set. I was right to pull that out at this moment in time. And that's it. Job's done. Now, I picked a comment up yesterday saying, do I ever lose? Well, of course I lose. I lose all the time. The difference is I manage my loss. There's a sacrificed position. On Friday gone, I sacrificed a number of positions because there was a news event coming in. I didn't want to get tied into it. Now, when it comes to trading, you're always sold on you only need a 40% win rate, your risk reward 3 to 1. It's all bullshit, man. It's absolute bullshit, a lot of it. If you're good at the job, you should be better than 50%. So anybody talks to you about 40% win rate, no. And I'm talking day trading here, guys, not swing trading. Swing trading is a slightly different animal where your win rate will be less, but I still subscribe to if it's under 50%, there's something not quite right. Because you should be able to read those conditions a lot more right than you get it wrong. Because if you're getting it wrong more than you're getting it right, are you really any good at this job? No. When it comes to risk reward, all right, that's another bone of contention. You should risk nothing. You should invest. So your investment, whether it's a small investment or a large investment, will generate X amount of money. Now, I come from a business background, so I think in ROI, return on investment. If I put £100 on the table and I got £120 back, that's a good investment. But in the trading world, you're supposed to have 300 quid back. No. It's not quite as simple as that. Every trade is individual. Stop has one job, protect the account. You've just seen a trade there that ran up to within a few ticks of my pain barrier. If it went into it, fine. I already accepted it. It was just a bad investment. I wasn't there to look after it. So I set it out in such a way it would look after itself. And it's paid me. And I do this every day. Every single day. Show the guys in the squad what I'm going to do before I do it. Or if I open my mouth, I'll back it up. Show me somebody else that does that, because there's not many. I can probably count on one hand and still be able to bite a couple of fingers off of people that I know can do that. And the other side of it is just be patient, guys. Just be patient. So as always, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.